What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode we're going to be doing a stock market technical analysis update, and we're going to start out by looking at the ticker symbol SPY, the SP500 ETF. Now before we get into it, don't forget to smash that like button to help me out and subscribe to the channel so you don't miss future updates. Now let's crack open this chart and see what's going on in the stock market today. Alright, so the market was actually having a pretty good day today. If we switch over to a 1 hour chart, we see that we had a gap up and the gap quickly closed, and the price was starting to head higher throughout the day. And then in the last 3 hours of the session today, we seem to have started to take the elevator down. Now I won't quite call this the elevator down just yet, because we did seem to find support at this previous resistance level, which acted as support a few days ago as well, which is right around this $332 level. However, we have not seen a confirmation bounce off of support yet, so it's hard to say if the elevator down is going to continue with tomorrow's session, or if we're going to see a bounce off of this support level and start heading back up to test the previous all-time high. Now we did get within about $1 of the previous all-time high, which is pretty close, and it's hard to say if that was the test or not, because if the market continues to go lower and we never actually get this bounce to test the previous all-time high, there's a lot of downside risk in this market. With how the market's been gapping up, leaving these areas where there's been no price action, we could easily see a scenario where the elevator continues to go down before we finally see that bounce. So this is what I've been saying, that the market likes to take the stairs up and it likes to take the elevator down, and the market has been walking up now for 7 days in a row of consecutive gains, and now seems to be ready to erase that consecutive gains with today's close in the red. Now remember, one day does not set a trend, so there's no reason to hit the panic button yet, but there's definitely more risk entering this market as we see these gap ups and valuations increase and inflate. So if we jump back over to the daily chart, we can see that today was a giant red candle, which is not what we want to see if we're bullish. So we're going to learn a lot in tomorrow's price action if we see a bounce off of this support level, or if we think we're going to see lower prices to close these lower gaps. So as far as the price action for today goes, we did finally get a close below the 5 EMA, and you remember me saying in last night's video that we had 9 closes over the 5 EMA, which shows that there was a lot of very bullish momentum. Now we did barely close below the 5, but it is something to note because it is a trend breaker, and we're waiting to see a reversal in the trend, which is a very bullish trend that we've been having. So with any close of the gaps below, we're waiting and watching to see if the 5 EMA is going to turn down and head down below the 13 EMA, because that will be a sign that this rally could be ending and we might see a downward trend for a little cool off session. Now we do have the support level we currently closed at around $332, and then we will have other support levels at these gap closes about $330 and $327. So with any downside price action, look for those levels to hold up as support. We also have the 13 EMA and the 20 simple moving average that could act as support as well, because of how strong this upward momentum trend has been. The moving averages typically act as support when we have strong upward trends in a market. Now the market was kind of overstretched and overbought, and we were riding up on the top of that Bollinger Band, so it's not surprising to see the market cool off a little bit. So we really need to see what happens tomorrow with the price action to see if this is the start of a trend reversal, or if it is just one day to cool off before the market consolidates its gains and starts heading higher again. So upward price targets, we're still looking for a test of the previous all-time high around $338, and a break of that we're looking to test $341. If we jump over to the Nasdaq 100, we see that we now have 3 red days in a row, and that is exactly what I was predicting, because we did have that gap below us. So if I switch to a 1 hour chart, you see this gap that started around July 31st, and that gap has been open until today, where we came down in the last 3 hours of the session and more than closed that gap. So now that that gap is closed, if we go back to a daily chart, we see that there's really no support left on this market on the Nasdaq 100 except for the 20 simple moving average, which typically does act as support in an uptrend. However, we are on the 5th wave of the Elliott wave, and that is the last wave before a correction. So if we did just witness the high of wave 5, I would expect to see some sort of ABC correction pattern that will bring us to a lower price before the market's ready to head higher on the Nasdaq 100. So there's still a bullish trend on the Nasdaq 100, and we still have the 5 trading above the 13 and the price action still above the 20 simple moving average. However, we do see that that 5 EMA is starting to roll over and head negative. And last time we saw that, the 5 EMA got all the way down to the 13, went sideways for a few days, and then started exploding to the upside again. So there's no reason to panic just yet. We're waiting and we're watching to see if this 5 EMA is going to cross below the 13. Now remember, with the Nasdaq 100, it is unique in the sense that when the 5 is above the 13, the trend seems to stay intact. However, as you can see, when that trend starts to break down and we see the 5 cross below the 13, bad things happen until the 5 EMA crosses back above the 13 EMA. So while it's not that simple on the SP 500, that is a Nasdaq 100 trend that is very strong, and it has been following that 5 above the 13 trend for a few months now, and that's something that will definitely break this bullish rally if we see the 5 cross back below the 13. So if you're on the sidelines right now, you probably should stay on the sidelines until we see where the price action is going to take us. Remember, the Nasdaq 100 is at all-time highs and it is well above the 200 simple moving average. So that doesn't mean we're going to have a huge drop just because there's downside risk. But when you weigh the odds of risk versus reward, there's definitely a lot more risk than reward at this point in the market. Now that doesn't mean you're bearish and you should be shorting, because like I said, the trend is still bullish. It's just the fact that when there's more risk, you should be a little more neutral before deciding which side of the trade you want to be on, unless you're already in this market. If you're in the market, there's no reason to panic, but if you're not in the market, I wouldn't necessarily jump in right now either. So one reason I say that there's risk entering this market is if we jump over to our VIX, which is our fear indicator, we do see that the VIX broke above our support level of 23.5, and we wanted to see that act as resistance. However, the VIX had no problem blowing through that level today, which tells us that there is most definitely fear entering the market again, and that fear is not ready to leave just yet. Remember, to see new all-time highs, I said we wanted to see the VIX continue this downtrend and ultimately head towards a VIX level of 18. Now anything above 23.5 is where we saw previous volatility before, when we came down to 23.5 and had this huge spike in volatility and we saw a big correction in stock prices. Now that trend could be repeating itself with today's VIX price movement, and we see that the VIX broke up and closed at 24, which is half a point higher than 23.5. So a very decisive close above what should have been resistance wasn't acting as resistance, and that tells us that we might not see new all-time highs just yet. So look for the VIX to stay above this elevated fear level, or if it's going to start trending back down, but that is something we need to watch and see, because one day doesn't tell us the whole picture of what we need to see to know the trend. And remember, we're talking about a trend reversal right now. The trend is still bullish, so don't get me wrong, the bullish trend is still intact, but we're looking and we're waiting to see if there's going to be signs of a reversal. So let's jump over and check out some of the other sectors, and first up we have the financials. And like I said in last night's video, I expect to see the financials eventually come up and test the 200 simple moving average. However, I did not expect to see today's price movement be so bullish. We had a huge gap up, and as you can see by the wick here, the price was starting to run up towards a 200 simple moving average today, which is well above the Bollinger Band, and it had a nice gap up. That is extremely bullish price movement, and I think the financials need time to sort of consolidate their gains and possibly come back down and test this breakout before heading higher. That doesn't mean it has to come down here and test this before bouncing and heading to the 200, but this gap up and this aggressive bullish momentum is not sustainable in the long term. So the financials had a great day, closing up over 1% when the rest of the market was generally down, but the financials were up much higher intraday and closed down lower, leaving this gap open still. So I still think we'll see this gap close and ultimately come back down and try to find support, maybe even at the 5 EMA, before bouncing and heading higher. Overall though, the financials are looking very bullish, which is a good sign. If we jump over to the industrials, we had pretty much the same exact thing. We had a gap up and a price action move very high above the Bollinger Band before giving back some of its gains and closing up ultimately 0.5% higher. So still a very bullish, explosive move we're seeing here in the industrials, with multiple days of consecutive gains now. We also see the 20 simple moving average is about to cross over the 200 simple moving average, which we want to see that bullish momentum of those simple moving averages crossing over to the bulls camp. We now see the industrials are trading over the 200 simple moving average, and the 20 simple moving average is about to cross over, head to the higher side, and we see some very positive sloping developing EMAs on the 5 and the 13, which shows us there's still a ton of momentum in the industrial sector. Jumping over to healthcare, we're still consolidating our gains above our support level here, and we see the 5 EMA is also getting dangerously close and testing its ability to cross below the 13 EMA, which would be a bearish reversal. That could signal the end of this bull run, and if we zoom out, we see the healthcare had a very nice bull run, so it would not be surprising to see some sort of ABC correction from these highs, maybe coming back down here and testing the 200 simple moving average and bouncing before heading higher. So again, this is all speculation, and we don't have enough information right now until we see some breakdowns on these support levels. As long as the price action's trading above support, it could just be consolidating its gains and taking some time off the clock and heading sideways before its next leg higher. So just look for healthcare to hold up above this support level. If it starts breaking down below, we could go back down and test the 200 simple moving average again and see if the trend is going to continue. Now, if we jump over to the dollar, we see that the dollar had another good day today, which tells us that there could be strength returning to the dollar. And if strength's returning to the dollar, we don't expect to see asset prices continue to inflate. So if we look at the dollar, we see that we did seem to find a bottom, and now we had 3 green closes in a row. If you look at this chart, the last time we had 3 green closes in a row, we were also in some sort of a bouncing correction pattern from a downtrend. So it's still too early to say if this is a correction from a downtrend and the downtrend will continue, or if this is a trend reversal. So we're still waiting to see if we could come up to this resistance level and break right through it, or if we're going to get rejected and continue the downtrend. That is something we're still waiting and watching. But the fact that the dollar is showing some strength could be part of the reason we see asset prices coming down and correcting and taking some time to cool off a little bit. So on that same note, we saw silver come down big today, and we had a huge bearish candle. And if we look at gold, we had the same exact look. So remember, the dollar strengthening is going to cause these other assets to correct a little bit because they've been on these absolute monster bull rallies. As the dollar continues to strengthen, we would expect to see further corrections in these other asset prices. So let's also jump over here and take a look at Apple, and we see that Apple had another cool off day as well. So Apple also has its 5 EMA crossing negative, and it could start heading down to possibly test the 13 EMA. And I still would like to see Apple come down and close all of these gaps and bounce off of support before trying to head even higher. Apple had an absolute monster move after earnings, and it's only a matter of time before people start profit taking and leaving this stock before ultimately seeing value in it again and buying it back up. So it's no surprise to see Apple having some time to cool off here, and I would still let Apple cool off and head lower before being a buyer of this stock. Now, Apple is a market mover, and it has a lot of weight in a lot of the indices, so it will be something to note, the fact that Apple is coming down here and showing some sort of correction pattern, possibly, that it could be a sign that the indices will also see somewhat of a correction. Now with the SP 500, I still think there's a lot of strength in financials and industrials, and ultimately they don't need Apple to continue to head higher, but we would expect to see a continued cool off in Nasdaq 100 if we see Apple continue to cool off. So the Dow Jones had an absolute monster open, and as you can tell from this candle, the Dow Jones opened way up here and had this giant gap below it, which it actually closed by the end of the day. Now it was also way above the Bollinger Band, which shows that there's still a lot of bullish price action going on in the industrials. Now the Dow still has these 3 gaps below it, so who knows if it's going to continue down and close these gaps, or if it was just cooling off some of its gains before it's ready to head higher. But the Dow is the one indice that is still lagging the others, and we do see that the Dow is nowhere near closing its gap from the crash. So to close the gap, we still need to see the price go all the way up to about 288, and we're still trading down around 277. However, the Dow did form this higher high yesterday, and that is a very bullish sign, so a lot of bulls might be taking that opportunity to buy the dip. So as the Dow comes down and corrects in any amount of fashion, I would expect to see the Dow bounce and possibly go back up and try to close that gap around $288. But right now, when you're looking at this kind of bullish price action and these kinds of monster moves in the market, it would not be surprising to see the market come down, correct, close all these gaps, and then ultimately start heading higher. Now, we're not going to speculate on why the market could have sold off today. It could simply just be that it was time for a cool off. Right now, looking at the technicals, we still see very bullish technicals with the 5 EMA way above the 13 EMA and the price action way above the 20 simple moving average. We're also trading above the 200 simple moving average on the Dow now, and we did just recently form a higher high. All of these are bullish price action technicals technicals, and there's no reason that one day with a little bit of red is going to cause us to panic and think that the sky is falling. So going back to the S&P 500 SPY ETF, we are waiting and we're watching to see if this $332 level is going to hold up as support. If not, we're waiting and watching these gaps below at 330 and 327 to possibly close and hold up as support as well. Any break below those will be a very bearish sign, and by that point I would expect to see the 5 EMA crossing back below the 13 EMA. Also pay attention to the 5 and the 13 EMA on the Nasdaq 100, as that has been a huge indication of the trend. In the last few months of this bull rally, that has been the indication that the market rally will continue. So that's the update for tonight. Please remember to like this video, it really helps me out, and remember to subscribe to the channel if you haven't already to keep up with all of my technical analysis. So thanks for watching, and as always, I will see you in the next episode.